Hello, today is the 12th day of December 2012, and this is where the month, day, and the year have the same digits. This will not happen again for over 88 years. Therefore, question, what is a bigger number? The amount of milliseconds that will pass until January 1st, 2101, or the current national debt? Okay, so let's just take a look and see what the answer of this is, shall we? Let's say there's 60 seconds in a minute, 60 minutes in an hour. So therefore, 3,600 seconds in an hour, 24 hours a day, gives us 86,400. There's 1,000 milliseconds in a second, so we'll multiply this again by 1,000, and we have a number of 86.4 million. Okay, so now what we're going to do is we're going to take the number of, okay, we'll go with 86.4 million. What we're going to do is we're going to take the national debt, which is 16.2 trillion. This is, oh, we need more. Trillion is a big number. Divide it by the amount of milliseconds, which gives us a number of 187,500. Okay, so we'll have to divide this by years. There's 365.25 years, or days in a year, which means it would take over 500 years for 16.2 trillion milliseconds to appear. It's going to take less than 100 years for this date to appear, so the number that will be bigger is the current national debt. Yesterday I did a I did a prediction. I'm going to do one more again as well. And that was, on the final school day of 2013, I would fully expect the masses of seniors in high school in Canada to fail this question. Now, the mistake that I made was I really got to put the word silver from standard and Canadian maple. After all, it could be gold, it could be palladium, but a standard silver Canadian maple is $5. Okay, let's get on to the charts, and we'll start off within the daily chart for silver. Right now, it's up about 2% for the day. And we have this running average from this high. That's what this yellowish line represents, an area that was resistance in here, support, and it also coincides within the 32.95 significant Fibonacci level. That has been support for quite some time, and today it's had a little bit of a breakout day. Overall, still indecisive. It's continuously making patterns of lower highs and higher lows. If we switch this up to the more shorter term time frame and look at it from this low in here, we will do that within the hourly chart. And on the hourly chart, very much a choppy session. But you have this big red candle that happened earlier today, seeing the price go down from 33 1/3 down to 33. It's about a % move in 1 hour. And then boom, back. So that classic shakeout before the move higher. If it comes back, I'd be looking for this area to be that of support. On the weekly time frame for silver, we can show again the running average from the 49.81 high, which means we're now at the second time that this thing is looking like it may want to correct. This was the first time because it had managed to have this thing start to go higher again, but obviously not finding support here. Put this thing in a 1+ year bear market. This thing here, we're declining, got above this area, and now this area has flattened out. Clear breakout above these levels here is definitely a good bullish sign, but as of yet, it has not confirmed the break above this, a break above that a bull market is going to be happening like now. Alrighty, now as far as the game is concerned, as far as picking plays, the gold to silver ratio, this is a little bit of an older chart as it's from 10 a.m. this morning. It's a little after 1,400 hours as I'm doing this video. But I said on the setups that what I was looking for was I hit the range of 51.92 to 52.08, which is exactly what happened. And I also had the Dow Jones in here. It got stopped out earlier today. So with that being said, that means we have the Dow Jones, which lost 0.95%, and the gold to silver ratio at 51.95. And now it's already broken below 51. And therefore, what we're looking for is we have a stop at 53.18, profit 1 at 50 1/3, 49 1/4 for profit 2. So what that means is a move down to about here, and it's right now here. would be the first stop or first profit line, and then again down towards in here. Okay, so that is the gold to silver ratio on the shorter term time frame. And one more prediction for today, final one. I want to do safe ones. In the early part of the year, the news will be based on the debt ceiling, which will cause massive volatility in the broad markets. The Dow, the S&P 500 will have at least a 15%, but probably over 20% of a decline during this time frame. I will refuse at this time to predict what happens after this event, but as the early periods move on in the winter, late winter, January, February into March, I'd expect there to be some serious downward movements within the broad markets, as happened in 2011, as the 16.4 trillion, I think it is, debt ceiling is coming very, very close to being in the news again. So thank you for tuning in to today's video, and I'll talk to you later on. Bye-bye.